Welcome back, beautiful and amazing human beings. This is Gradowski of WeAreChange.org, and if you're paying attention to the news, especially the economic news, you're seeing a lot of grim, scary, and just outright terrifying headlines, like the one that we're seeing from the New York Times that doesn't really hide anything, but just says very clearly, "Are you ready for the financial crisis of 2019. But don't worry, it's not all doom and gloom. It's not all terrifying. There's not all fear mongering. There's actually a lot of good news, a lot of good opportunities. And to help us make sense of just the reality of the situation and to understand the bigger picture that's happening here, we of course have David Moadel, who is an analyst at portfoliowealthglobal.com. The link, of course, will be in the description below. And David, I mean, these headlines, they're not really that reassuring, especially by the New York Times. If you look at the global debt, it is now at $184 trillion. It is pretty much, how much is that here? $86,000 per person around the world. And we even have people like Ron Paul saying that we have to brace for a market meltdown that's going to be worse than the 1929s, a 50% correction. David, what are you seeing? And is this just over speculation, overhype, or what's the reality of the situation that we're facing?
I think the reality is actually even worse than that. And I'm a big fan of Ron Paul, and he's a pretty smart guy. He's made some amazing calls, and if he says that there's going to be a big market meltdown, who am I to argue with him? Personally, I see this meltdown starting in the United States and spreading worldwide, just like we saw in 2008, 2009. But this could be and probably will be a lot worse. And yeah, I'm not trying to rain on everybody's parade. I know this is the holiday season. I don't want to be the Grinch that stole Christmas, Hanukkah, and so on. But look, the FANGs are, the FANGs, Facebook, Apple, Amazon, Google, Netflix, those are supremely overvalued. And interestingly enough, in late 2017, you may have noticed, your audience may have noticed that the FANGs and the cryptos all peaked together. Well, personally, I'm bullish on one and bearish on another. Can you guess which one? Yeah, well, I'm bullish on the cryptos, especially Bitcoin. FANGs, not so much. Those FANGs, those few tech stocks, have been propping up this market, this house of cards, for way too long. It's time for this bubble to burst. It's more than due. We have a market correction, a bear market in U.S. equities about once every decade. It's been, let me check. Yeah, it's been about a decade. And when we go into 2019, it'll be more than a decade. In what is now the biggest bull market ever, the bigger they are, the harder they fall. I'm looking to 2019 to have some real problems in the markets. I have a report on that. If people would like to download it, it's portfoliowealthglobal.com/crash. That's /crash, C-R-A-S-H, where people can learn more about that and how to protect themselves. If you want to protect yourself, just to give it to you short and straight, you're going to have to diversify. Don't just keep your funds in the U.S. equity indexes, the major indexes. You want to have some precious metals. You want to have some miners. I believe the miners are going to lead in 2019. You want to have some assets that are not correlated to the stock market. However you do it, also have some dry powder ready, some cash, because not that cash is a great thing to hold on to in large amounts, but you want to have something ready for when the you-know-what hits the fan, and believe me, it will.
Yeah, I mean, it's really just a matter of time, especially with just how artificially inflated it is, especially since there hasn't been a correction every 7 years like there should be, especially since the last major kind of economic crisis, the bad actors were rewarded and the bubble was pretty much just made bigger. Now, I've been saying on this YouTube channel for a number of years now, hey, we don't know exactly what's going to happen here, but it would be smart if you take 15% of your money or your assets and invest in alternatives to the dollar, alternatives to the stock market. And correct me if I'm wrong, I think that's a good move to make, especially with all the headlines that we're seeing right now. We have the Daily Mail saying the stock market is now on pace for its worst December since the the Great Depression. I mean, these are just terrifying headlines here. Again, the charts, bulls and bears are obsessing for over 2019. Everyone is saying it's going to be pretty much clear that we are going to be in a bear market in 2019. And as you were talking about the stock companies, the kind of online tech companies all being overvalued, we've seen the same kind of correction with, of course, online digital media companies like Mike.com, Vox, BuzzFeed. BuzzFeed is literally selling kitchen utensils in Walmart right now because of their over-evaluation, because of people jumping in. And people are realizing also with a very similar situation with marijuana stocks, like, hey, just because everyone's jumping on board doesn't mean it's a good time to jump on board. So as far as everything moving forward, we're seeing a lot of different alternatives being portrayed there, but how do you see 2019 going with its bearishness?
Yeah. The time to hedge is now. You need crash hedges in your portfolio. Whether you believe or whether you don't believe, it doesn't matter. It's going to happen. Crashes happen sooner or later. This one's overdue. Now, it is true bull markets don't die of old age, but they do die when there's no reason for it to be as high as it is in the first place. You remember pets.com, okay? You remember the dot-com bubble? Whatever happened to pets.com? Yes, Amazon survived all that, okay? But there are a lot more little pets.com type of companies than there are Amazons. And who knows whether Amazon will even survive all of this. With the PE ratio in the triple digits, it can't stay like that. Look, I believe that right now the cheapest asset in the world is silver. I love precious metals. I love gold. I love gold and silver miners. And on our newsletter, which is on our homepage, portfoliowealthglobal.com, we're going to keep everybody alerted as to when to get into the miners, which is going to be huge in 2019. But right now, you can get into gold and silver. With gold, yes, it was around $1,200 an ounce for much of 2018. Now it's breaking out. It's heading toward that $1,300 key level. Silver, which I like even better, was basing at around $14 per ounce for much of the year. Now it's coming back up to that $15 per ounce level. I love it. You probably heard this before. The longer the base, the higher in space. We've had a long basing process for precious metals. Great time to get in, or at least start accumulating. Why I prefer silver over gold right now? Well, much of your audience that's very sophisticated probably knows, or at least maybe has heard about the gold to silver ratio. The gold to silver ratio right now is above 85. That means it takes 85 ounces of silver to be the equivalent in price to 1 ounce of gold. That's obscene. The median is around 50. And so when we get to those extreme levels, what usually happens is outperformance of silver relative to gold and outperformance of silver relative to other asset classes. What a great time to start accumulating, hedging your bets, because precious metals have been around for 6,000 years. Gold and silver as a form of money, as a great store of value. Why leave yourself exposed? You got to diversify. That's a great way to do it.
Yeah, diversification, I mean, if you do it rationally, is the common sense, logical thing to do. And that's why I've been saying, hey, anything, guys, alternative currencies to the dollar, gold, silver, cryptocurrencies, penny stocks, whatever it is, anything just as a hedge to your bets, I think is extremely, extremely important. And that's why we've seen a lot of people go into precious metals. We've seen a lot of people also go to the cryptocurrency market. As, you know, the economic rumblings of this kind of bigger bear market are happening, we're seeing the crypto market also go up right now with people saying, wait, we're going to take our money away from the stock market and put it into the Wild West crypto market, which is also interesting. And with this kind of big artificial bubble losing air, as it's described, how do you see all these kind of alternatives coming together in the next few weeks, in the next few months, and most importantly, in a year from now?
Well, you alluded to the debt bubble. You mentioned how big the global debt bubble is. Well, I'm not proud of this, but America has contributed to that debt bubble so much. Have you ever looked at debtclock.org, where they keep track of the U.S. debt? It is approaching 22 trillion now. It is going to explode. And when that happens, again, it's going to take everything down with it except for, as you alluded to, those alternative investments. Cryptocurrencies is one of them. When the dollar goes down And it will. I believe actually the US dollar against other world reserve currencies is going to go down 30% within the next 5 years. That's my call right now, and I'm making it. Cryptocurrencies will be such a wonderful alternative. It's already an alternative to hyperinflation in places like Egypt, Argentina, Venezuela. Could the U.S. become the next Venezuela? We're getting there already. The U.S. dollar, sure, it outperformed in 2018. Actually, it outperformed many other asset classes, but it lost 10% of its value in 2017. Really, it's just a dead cat bounce in 2018. I believe it's going to continue to go down. It's going to hurt people's buying power. Have you ever noticed when the dollar goes down, it hurts not just the wealthy's buying power, but everybody's buying power? It hurts you everywhere you go. It hurts you at the gas pump. It hurts you at the grocery store. It hurts you when you pay your bills. I'm not saying there's necessarily a concerted effort to make this happen. More likely, the Fed is just doing what it knows how to do to solve all the nation's problems very quickly, or at least appear that it's solving the nation's problems quickly. It's a money printing regime. That's what it does. That's all it does, to quote the Terminator. So this is not going to stop. They're taking away the punch bowl by raising rates right now. Yes, we just had an announced rate hike yesterday, Jerome Powell, but I believe actually they're going to be rate cuts going into next year. That's right, rate cuts, something you haven't heard about in a while. Why? Because you need room to hike. You need room. You can't just keep hiking and hiking and hiking. You're going to kill the stock market that way. It's going to get killed anyway. You need room. You need breathing room if that's your job, if you're a money printing machine, which the Fed is. I believe there's going to be rate cuts. I believe this is going to be huge for gold. It's going to be huge for gold miners. And, again, cryptocurrencies. When the dollar crashes, which it's been in the process of doing since 1971 when we went off the gold standard, when it really crashes into hyperinflationary status, you'll be glad that you own some cryptos. You'll be glad you had it in your portfolio, along with gold and silver.
And really just any alternatives. And I always say, diversify as much as you can. Look into all these other things. Again, at least it's 15%. It makes common sense. It's logical. But the best thing you could do, just my opinion, is to get to know your neighbors, get to know your friends, because this storm that's coming, everyone's saying it's going to be a major one, and it's no longer just alternative media. It used to be just alternative media making headlines, just like the New York Times did. Because when you're looking at the numbers, they absolutely make no sense. And I really don't believe anyone at the Fed or anyone that's the supposed professional economic analysis knows anything of what's going on there, because the whole market is so inflated, so all over the place, it's just impossible to predict. But people, be smart. Here in New York City, we had a national debt clock. We needed to add a special digit to it because of how much debt we're in. A system like that is just unsustainable. David, unless you have anything else you want to say, I just want to say thank you so much for coming on this show and informing us. And if you want to find out more information about David, check out portfoliowealthglobal.com. The link, of course, will be in the description. David, thank you so much for everything, and we're going to talk to you soon, especially when these economic realities become more of a reality.
Absolutely. Thank you, sir. I appreciate it. Hope to talk to you again soon.